All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market this morning gapped down just slightly, and it's pretty much opened like every other morning here in the last little bit with an early rally of about 10 points. That's been pretty consistent regardless of where the market has opened up. We've kind of seen that 10-point rally come in. It pretty much that's kind of marked the highs for the day. I know yesterday, we had the kind of the 10-point move on the open, and then we broke that briefly before selling off into the close. But pretty much this kind of 10-point rally has been the highs for the days. Here of late as the market has ticked. And, we're not talking about a lot of stocks making mass movements here overall. But, we still have a market that is in a strong volatility compression, just absolute volatility crushing, going on out there. We have, both in volatility in terms of how much a stock is moving on a given day, along with implied volatility on options, just absolutely getting crushed here in this market. And, we have that going on in this undertow of a market that's really, the moves that you see that have any kind of significance to them, you could bet big money that there's either an analyst behind that or some earnings behind that. There's some sort of news behind it. And the stuff where there's nothing, no real news, no real analyst, it just kind of ticks a little up and ticks a little down and doesn't really go anywhere. Even the stuff that has analysts driven behind it, like a data. We looked at this yesterday. I said I was interested in this yesterday. It was upgraded yesterday. And, okay, it gaps up and sells off. Okay, upgraded, sells off. Okay, it's probably going down. Then get to today, right? And you can see the Bollingers, they're just kind of flat and compressing. It's in this compression mode. And that is the majority of stuff out there. And, a lot of the stuff that's kind of made big moves, Netflix, for example, like we've looked at, it's been a matter of analyst upgrade news, and, the days where it doesn't have anything are like yesterday and today where it just doesn't go anywhere. And that is going, or that so far is continuing here today. How long will that continue? Typically we don't see it continue very long. 2016 was quite an exception. I think most of the days that year were that way. But this is something I do think is going to be fairly short term. But anyway, that's the environment hasn't changed, and I got a question this morning asking me, hey, market's gapping down. Is it time to load up on puts and play another leg lower in the market? And my response was, you can, and ultimately it may be, but there's nothing in the open this morning, at least in the pre-market, to suggest that the market has a fear catalyst to sell. When I was looking and we saw S&P futures drop, here, yes, into the close yesterday, but then they made this kind of drop right here in the first couple hours, and I was on the road and I pulled up the news here for it, and I looked at it, and it was in fact, I may not be able to find it in here right now. Let's see real quick. But basically, it was attributing the drop to China and the U.S. and the whole. Yeah, it's not even in here anymore. But attributing the drop to the tensions between the U.S. and China based on technology stealing and the whole arrest of one of the Chinese corporate CEOs and that whole that whole thing, and you look and you go, okay, that is one story that's old, tired, played out, and yes, there's still going to be headlines and stuff still has to happen, but the market just doesn't care anymore when it comes down to it. So really, just not much of a catalyst, here for the markets. Now, I was also asked if we're looking at a market that's being driven higher because of Chinese stimulus or the announcement of Chinese stimulus, right? And it's a very valid question, very valid point, to look at and say, hey, you know what? This leg in the market is being driven by, we saw China announce stimulus measures, and okay, market's gone higher. And there's some validity there, right? But I don't think it's a big chunk. I don't think it matters all that much overall, in the big picture. If I come back to 2010, and 2010 was the flash crash, and we can see a day where China announced stimulus measures. And they came out, and we had the flash crash on a Thursday right here. On Friday, the market was kind of all over the place. And then Sunday night, S&P futures were up 50 points. Now, this was when the S&P was below 1,000. Okay, so 50 points was absolutely monster. That's 5%. In this market, that's well over 100, 120 points. So monster gap up on a percentage basis as China announced stimulus measures. Okay, you can see what happened. Yeah, all right, next day a little up, yes, and there were other, things going on, but it wasn't this, here we go, big bad bull market breaker here or mover here. That said, China for a while has been in some tightening, has been in a tightening stance. Here is the Shanghai Composite. As they have been in a tightening stance, worried about some excess in the financials, worried about some excess in the real estate markets. They have tightened, some of the controls. They've tightened some of the stuff they've been doing, and we have seen the Chinese market not just pull back and correct with global markets here in the last 3 months, but the Chinese market has been absolutely decimated here in the last year. 3,500 down to 2,500. I mean, we're talking about a 35% pullback here in the Chinese market over the course of the last year. It has been pretty brutal. China finally kind of announcing a little bit of change in that policy, a little bit of change that, hey, you know what, they're going to start to, maybe do a little more easing rather than tightening is obviously welcome news, and over the long term, I think has to be tracked. But if there is trade war resolution plus Chinese stimulus, the Chinese market and the Shanghai Composite could easily trade back up into the low 3,000s in a very short time period. In fact, if you're looking and you want to say, hey, you know what, I think the trade war is going to resolve itself, very, very bullishly, and you want to take advantage of that and get some skin in the game, for China, just take a look at some of these spreads on the FXI here, and you could take a look out to something like the 43, 44s. They're not super cheap. They're about 30 cents here on them. So they're not dirt cheap, but, that's only expecting a 10% move, right? And, if you start to get out looking at what could be maybe even a 20% move, you could get them a lot cheaper, albeit it's way more speculative. But, it's one of those markets that, that stimulus, if it is combined with some sort of very positive trade war resolution, could send that market significantly higher here as we go forward. Now we have seen excuse me. Sorry about that. We've seen some earnings come in. CSX reported earnings. We see the stock down a little bit here. I haven't gone through everything with it yet. Just looked at some of the headlines. Just looking at it, I think there's a lot of positive in it, at least on the initial glance. I can see why it's selling here on the open. But, looking at, some of the details of it, I don't think it's very negative at all. But we'll go through it further, the conference call, if you want to see what, they came in. The earnings hit the consensus, right? They came in right at consensus. Revenue beat just barely, here with CSX. So, not a whole lot in terms of big beat or big miss there with CSX. But a lot of this is about the future. And when it comes to CSX, it's, oftentimes about capacity utilization. So we'll be taking a look at that. We also saw earnings out of Morgan Stanley. And this is pushing the financials down a little bit here today. Morgan Stanley down 5%. Trading. The trading side of things, pretty ugly here for Morgan Stanley. So some of the, some of that, big bank euphoria from yesterday coming off a bit. But, what Morgan Stanley said has nothing to do with Bank of America. Right, you can't look at Morgan Stanley and go, oh, well, you know what, their issue has anything to do with Bank of America, especially after Bank of America's earnings yesterday. In fact, quite the opposite. You look at Bank of America and you go, wow, they're kind of shielded from some of the issues that Morgan Stanley has. And, that's very apparent. Generally, Morgan and Goldman earnings look similar. But Goldman, definitely a more solid report, and one where they didn't have some of the problems exacerbated the way Morgan Stanley did in terms of trading. So banks pulling back a little bit here today there with the Morgan Stanley news, but I don't think it means anything. It doesn't change anything that we talked about on the banks yesterday at all. And banks in general fairly flat. TLT fairly flat, and I think that will be the norm. If TLT is flat, banks will be flat, and vice versa. And if the TLT rallies, banks will fall. TLT falls, banks will rise. And that correlation I do expect to last for quite a long time. Now, for the challenge, I have a position in XLI. And, sometimes you get into a position and it feels, yes, the stock isn't going anywhere, but that every day the stock doesn't go anywhere, right? What does that mean? That means your option value is going to diminish, right? Just one of the risks of trading options, and, going nowhere is a negative. And, you can see this has been the tightest range here on the XLI in a long time. It's been about a 50-cent range since I got in. And about every day, I'm losing about $100 due to time and implied volatility. And, the position is probably down around 400. And I'm down probably about 100 based on the delta and about 300 based on time and implied volatility. Great. That's the risk. I know that. It gapped on down this morning. Never really traded down here. It moved pretty quickly back to kind of break even. Up about 25 cents here, this morning. Not really showing anything massive from a directional standpoint here. But at some point, I have to kind of look and wonder and just go, okay, is this position like the crab that, I used to go catch as a kid? As a kid, would go to my grandmother's in New Jersey, and she would take us down to our aunt's, and she had some crab pots there in the water in the dock in the back, and we would have fun pulling those crab pots. We'd slap a piece of raw chicken in there, lower them back down, and we'd catch a bunch of the crab. And then we would go back to my grandmother's, and we'd put them in our big pot, and it was just cold water. And we put all these crab in this big pot of cold water, and then she would turn the stove on. And, it's just one of those things where, the trade, definitely has some of that feel to it. And I'm going to have to be wary of that here as the day progresses, and look to pull it off if by the end of the day, we're kind of sitting in a very similar situation. But I'm going to give it just a little longer here. I don't see anything, major directional, in terms of it. But if I have to pull it off, my next trade will be in kind of that position as 2 trades ago, where I have to have the odds strongly in my favor, in terms of both directional movement and option value. If that's the case, we'll go out and make that happen. Now, there are 2 stocks out there I find really interesting this morning. SeaWorld. SEAS, which caught an analyst upgrade today. And you can see how this has rallied all the way back to the upper Bollinger. Bands are contracting. It's had lower lows. It's had a fairly low volume rally. This is kind of the type of picture that tends to see a decent pullback associated with it. And so, upgraded today is going to kind of keep it up here today. But if we're looking at a little bit of a gap down tomorrow on SeaWorld, it's probably a gap that's very chaseable, and it is definitely on my radar. I'm not sure if I could trade it for the challenge with how the option spreads are, but definitely some of that price action. And then here is Six Flags, which was upgraded today as well. And you can see this one is gap down, breaking below the 7-day moving average here. After this rally, you can see the rally. The volume hasn't been all that great on the rally. We're not talking about any real material volumes that have really kind of come into it. So it's just one where that fresh break of the 7 might be in for a little bit of pullback back to the 58, 50, 59 area. But both of them, they march to the beat of their own drum, not really all that market weighted, but both upgraded today and having some action that is either toppy or, lightly bearish here. You can take a look at something like a Micron. Micron had this nice run up to the upper Bollinger Band, one of those analyst-driven runs, and has now had a little bit of pullback. Right, it's pulled back into the Fibonacci areas, pulled back into this gap area. This is where I would expect it to find a little bit of support. This one is on my radar. I would love to be a buyer of this for the challenge, and definitely have my eyes on that as we go forward here throughout the day. And we'll make a decision. I don't think I have to go after it right now, or I miss something. In fact, I do expect the market to have very similar characteristics to the rest of this week, where after this first hour, it's just ho-hum. Not a lot of real major change. Obviously, a catalyst could change that. Some sort of news element could change that. But that I think that's what it would take to get the market to really move, one way or the other. Will it have its 10-point drop and 10-point pop? Yes, it will. But to get it to make a significant move, a significant change, I think it will take take some sort of stronger catalyst. One of the reasons why the XLI is outperforming a little bit today is Honeywell. Honeywell signed a big contract, or is going to sign a big contract here with China, and so that's helping to push a little bit of strength into Honeywell. So we do see the XLI outperforming just slightly with that, but I don't think it's that big of a deal overall, in terms of, directional implications here, for the stock and its impact there on the XLI. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.